Alright, so in this video, I want to talk about a naked put trade I placed yesterday on FedEx for earnings. So FedEx was announcing earnings June 30th after hours. So on June 30th, FedEx was trading at around 138, 139. It closed the day at around 139.66. So because earnings is going to be announced, IV is very high. So it's a good time to sell options in that case. So the trade that I went with was I basically placed it almost close to 4 o'clock, almost end of day, when FedEx was trading at around almost 140. I sold the naked put at a 131 strike. And then today, July 1st, FedEx opened at around 150, 159, 160, moved up all the way to 160, then dropped to 158. Regardless, my naked put was at 131. So basically, when I sell a naked put, I collect a premium, I collect a credit. The way I win is if the stock stays above 131 come expiration. Expiration was July 2nd. Now the next day, the stock went from 140 to 160 almost. So the premium that I collected on Thursday, June 30th, will drop in value completely for two reasons. First, there's a volatility crash because earnings is released. And then second, the stock went 20 points higher. So now that put option is worth much, much less. So if you look under my executed tab, you could see that June 30th, 3:58 p.m., so 2 minutes before market close, I sold the 131 put for $1.24. So $124. And then this morning, July 1st, 9:38, I closed it for 1 cent. I definitely could have left it expire worthless on Thursday, July 2nd, but I didn't feel like holding on to it for 2 days just to save $6. I basically paid $1 to close this plus commissions. Obviously, 30 points is far. I mean, it's really, really unlikely that FedEx drops 30 points in 2 days for me to be worried. I should have let it expire worthless, but I just wanted to confirm the profit right away. I am a little bit impatient and I get scared easily. Regardless, so my confirmed profit shows here my closed P&L is $123, but this doesn't include commissions. So commissions on this was about $5.75 in and $5.75 out, so about $11 commissions. I mean, not bad for a 2-minute trade. And I was basically driving on the highway when I made this trade. I parked quickly, placed the trade quickly, and then today I closed it from my phone this morning. So basically this could be a how to make money from your smartphone video. Now, of course, it's not going to go this well every time. FedEx could have easily opened below 130. That would have been a problem, but I'm giving myself a good chance by selling a naked out of the money put. So how did I pick the 131 strike? Basically, I just look at the value of the straddle. So yesterday when I looked at the value of the straddle on FedEx for July 2nd at the 140 strike, it was trading around $9. So I took 140, removed $9 from it, and that gives me 131. So I basically picked the 131 strike to sell the naked put at, because that's the expected move of FedEx. Obviously, FedEx went way past the expected move this time, but luckily it went to the upside. And if FedEx had dropped below 131, what I would have done is probably sold calls at a 131 strike. So try to collect some credits before I have to close the whole trade for a loss. So I would have probably sold some calls at a 131 strike. That would have given me some credits. So I would have received the credits from the puts, the credits from the calls, and then I would wait till expiration, see where FedEx lands. If it lands, let's say at 125, then I'm going to have to close the trade for $6. But I collected credits from the puts, credits from the calls, and hopefully it's not a big loss, but it's going to be a loss for sure. But that's the risk with naked put, is that it's going to be undefined risk. I don't know how much I could lose. It's really unknown. So it is a very risky trade, but when it wins very well. I could have done a put spread. So I could have sold the 131 put strike and then bought the 126 put option. But then I would have received much less. I would have capped my max loss though. But I wasn't too worried that I didn't think FedEx would drop that much if it was going to drop. I felt that it already dropped in previous earnings. The stock overall, if you look at the chart overall, it's pretty low. it's got more room to go up. So I just felt the chances were that it goes higher, but with earnings, you really can't predict anything. You cannot really try to research or do any kind of analysis to really know where the stock is going. It's really 50-50 in terms of where it's going to go. So that's why I try to look for a strategy that gives me a bit more of a winning probability by covering most of the reaction. So by selling a naked put, I'll win if it goes up, I'll win if nothing happens, I'll win if it goes down a little bit. And even if this one's a loss, if you do this enough times, most of them will be winners, and hopefully the winners will compensate for the losing ones, the rare losing ones. But I just love how easy it was. I was driving outside, I didn't have time to get home, I parked on the side, I opened my phone, Questrade app, I just use my fingerprint. I don't even enter a password. That's what's great with the Questrade app. So easy login, as long as you have a good internet connection. I looked at the value of the straddle. I saw that it was worth 9 points. I chose a 131 strike, sold it, got filled right away. And then the next day, the trade ended up being a winner because FedEx flew, closed it for a penny. Basically an easy $110 profit. All right, so if you have any questions, leave in the comments section below. And if you're going to open an account with Questrade, use one of my referral codes below. One of them gives you up to $250 back depending on your deposit. The other one gives you $50 in free trades regardless of your deposit. If you enjoyed this video, click the like button, share with a friend, subscribe to the channel. Thanks for watching.